College students, medical students, let's be real. You probably have a lot on your plate right now. Tuition, textbooks, rent, maybe even ramen noodle nights. And then comes that shiny envelope in the mail, a credit card offer. It seems harmless, right? But here's the truth. Credit cards can either be one of your greatest financial tools or one of your biggest traps. So by the end of this video, you'll know exactly how credit cards work, how they make money off you, and how you can flip the script so that your credit card works for you. A credit card is basically a short-term loan. The bank is saying, we'll spot you the money today, but you got to pay us back later. Every month, you get a statement balance. If you pay it off in full, no interest. If you don't, that's where it gets expensive. The average interest rate on credit cards right now is over 20% annual percentage rate, higher than most student loans, personal loans, or car loans. So imagine buying a pizza for $20 on a credit card, only paying the minimum, and end up paying $40 for that same pizza over time. That's how credit card debt traps people. Banks love credit cards because they make money in three ways: interest from people who don't pay in full, fees like annual fees or late fees, transaction fees. Every time you swipe, the store pays the bank a small cut. And here's the kicker. Studies show that people use 12 to 18% more when using a credit card compared to cash. Why? Because swiping doesn't hurt the same way handing over that $20 bill does. And statistics show that nearly 45% of US adults carry credit card debt month to month. That's almost half the country stuck paying interest on yesterday's purchases. Credit cards aren't the enemy. They actually come with some really great perks that I myself enjoy. So if you use them strategically, you can take advantage of these perks as well. Think about where you already spend your money. If you're spending $400 a month on groceries, get a credit card that gives you bonus points for the cash back on groceries. If you're a commuter student driving long distances, get a gas card and only use it for gas. These focus cards keep you disciplined while maximizing rewards. And yes, don't get me wrong, there are cards that give you 2% cash back on everything, but that's better once you've built the habit of paying off your credit cards in full each month. For beginners, it's too tempting to overspend, so don't get those cards. Now, the first trap is that there are too many offers. Once you open up your first credit card, you'll suddenly get a flood of offers. Don't open every card. Why? Because every time you apply, the bank does a hard credit check, which dings your score temporarily. And trap number 2 is store credit cards. Ever been asked, want to save 15% today if you open a store card? Here's the truth. Those cards often have low credit limits and high interest rates. Plus, your credit utilization is calculated on each card separately. So if your store card limit is $500 and you buy a $200 jacket, that's 40% utilization on that card. And that's not good. That's going to hurt your credit score. Trap 3 is closing cards too soon. Let's say you've already opened a store credit card and you regret it. Don't panic. Just pay it off and keep it open for now. Why? Because closing it decreases your available credit, which makes your utilization look worse. Let me give you an example. Say you have 2 cards and they both have a credit limit of $500. Now, let's say that you have that $200, but on 2 cards with $500 available credit each, your available credit is now $1,000. Okay? And so $200 over $1,000 gives you a credit utilization of 20%. Let's say that you close that $500 credit card instead. Now that $500 is no longer in the denominator, which makes $200 divided by $500, 40%. So you see what I mean? It's better to keep the card open with a zero balance. And once you've built up better credit with other cards and your balances are low, then you can close it without hitting your score. Now, let me tell you how to win with credit cards, because I personally use credit cards, and the credit card game is literally about discipline, not about swiping. Here are your winning strategies. First, you want to pay it in full every single month. This is a non-negotiable. You want to pick a card that matches your lifestyle: groceries, gas, travel for rotations, match it. Avoid paying just the minimum payment, because that's how the banks trap you in debt. Don't chase every offer. Focus on one or two solid cards and then track your spending. Use your card to reflect your habits, not to create new ones. So here's the bottom line. Credit cards are like a scalpel. In the wrong hands, they can do serious damage. But if you use them with skill, then you can build a strong financial foundation for medical school, residency, your career, adulting, whatever career path you choose. So start now, use them wisely, and let your credit work for you instead of against you. And if you have credit cards, let me know in the comments which one you're enjoying today. And I posted in the comments which one I like as well. Now, if you choose to open this credit card, do your girl a solid and use my link that I've posted in the description. This will give me a little bit of kickback and you as well. But again, remember that I am not promoting credit card debt. I am promoting credit card leverage. So if you cannot pay it off in full every single month, then I don't want you to open them. Let's start to get acquainted with our numbers, be very responsible in how we're using our money, and then open the credit card. I've seen far too many people with hundreds of thousands of credit card debt, and I don't want you to be one of them. So use it responsibly, start with one and see where it takes you. If you already have credit card debt or you're wondering how you're supposed to manage your student debt, then you definitely want to hit the subscribe button because that video is next. And until next time, stay wealthy, people. Bye-bye.